Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. The market in July and August has been a story of two patterns, a V top formed over mid to late July and a subsequently V bottom formed over late July till about this week. This might normally be the precursor for a diamond pattern top, but I'm afraid not here. What we do have are a pair of bullish patterns, one breached, and interestingly on both sides breached, and also a bright red neckline extension, currently at 529.90, that was once a market attractor, but now looks like a support, especially as the green short medium moving average, currently 530 even, is entwined about it, as it has done since late July. Of the two patterns around the market, we have a dark blue mid-April to late June bullish shift pitchfork, breached on the upside 3 weeks ago and on the downside last week and the end of 2 weeks ago. Right now prices are hovering just under the dark blue middle tine above, currently at 546.25. The second pattern around the market is the newly drawn bright pink mid-June to early July bullish Andrews pitchfork, drawn around the new V top and the V bottom. On this one we are in between the overhead bright pink middle tine, currently at 552.25, and the bright pink lower tine below, currently 518.75. The market itself has risen up into a spread out congestion area between the March 23 high at 540.75 and the top of the congestion at 553.25. This area also contains a 61.8% absolute Fibonacci line at 553.25, so please note that. We then have a sparse area until the next set of resistances, the February 23 high at 565 even, and the congestion at 569.25 to 570 even, containing the September 22 low and the August 21 high at 573.25. Winnipeg Canola. Just one pattern here still shows the overall way forward here. This longer term pattern, one I spoke about 24 weeks ago, when I said, and I quote, "I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork," end of quote. This pitchfork, highlighted in bright pink on my daily chart, has so far withstood tests on the lower tine, right back at the start, and an almost test, a pretty significant almost test, late 3 weeks ago of the bright pink middle tine above, which is currently at 861.60, when the market rose, approached, but then shied away from truly testing the bright pink middle tine, and actually falling lower with a bearish harami in an outside day 3 Fridays ago. As I've said here for weeks and weeks, I think this pattern is very important for now and in the future. So please just keep it in your mind and keep a watch out on it. Now the fall lower was halted by the slowly rising green short medium moving average, currently at 776.60, as well as an earlier all-time high from March 2008 at 770 even. However, just in case, further down we have the rising mauve medium moving average, currently 760.80, and more importantly the 38.2% absolute Fibonacci line at 750.10. All these actions prompted me to draw last week a new pattern to describe what is happening. A late April to date, very large, broadening wedge pattern, highlighted in dark blue. That's currently 721.70 to 866.20. This is a very large pattern, and it utilizes the dark blue extension to the late April, late June head and shoulders pattern as the lower trend line. As I said 2 weeks ago, and I quote, "I think this might be the pattern to watch going forward," end of quote. I still think the same today, as prices have risen up through an old May to June based head and shoulders top neckline, currently at 798.5. We are indeed utilizing neckline as a support today to push through congestion at 808.60 and towards congestion between 1717 to 1720.60, made up from the August 21 low and the 50% Fibonacci line of the May 19 April 2020 move, respectively. Beyond that, we have the 838.20 to 839.20 congestion containing the September 2021 low at 839.20. To add to all this, I have today drawn a bright red late June to late July bullish Andrews pitchfork to show the bullish angle of attack. It's quite steep, I realise that, so it may not last, but it's there. In this pattern, the bright red lower time, currently at 794.80, is showing exceptional promise as a rising, steeply rising support. Bursa Malaysia crude palm oil. So as I've done here for most of last year, now into 2026, I'd recognise the wide congestion area that was overhead, but which became support, then a big congestion, and now support once more between 44.08 to 45.59. Prices, which had since late March been up over it, bar one failed attempt lower, mid-April, finally punched their way down through it 13 weeks ago, but could not sustain the move lower, with an original gapping action higher, changeover or otherwise, which topped out a number of times since the end of April to date. We seem to be close to finishing these heartbeat movements, up and down. Now, prices pushed higher 3 weeks ago, significantly higher, up through the bright green upper bear channel line, currently at 45.94, of the bright green April to date shallow bear channel, which is currently 42.58 to 45.94, leading me to lay out some potential targets topside for this attempted break higher of a primary target X up at 48.80 and a secondary harder to reach target X1 up at 49.51. Both are around resistances. Former is around the high for this year at 48.88, whilst the latter is just under a pair of 50% Fibonacci lines, especially the 50% Fibonacci on the July 19 to March 22 move at 49.64. However, that move higher ended up as a shooting star pattern, type 1 bearish, which casts some immediate doubts on the break upwards. However, I will still maintain them once again this week as we seem to be stabilising over, though not letting go of the bright green upper bear channel line. That was a lot to digest, but I'm afraid there is still more. You see, this all still comes to a piece I've previously spoken about. I noted the recent lows and fairly static highs of a bullish incentive, and a new pattern emerged. An early May to date ascending triangle pattern, highlighted in dark blue on my daily chart, and that's currently 45.42 to 46.64. 3 weeks ago I said, when the market started looking at the upper trend line again, and I quote, "There are no targets for this pattern as yet, as we have just breached it and not broken this pattern on the upside, but I can once more lay out some potentials for what could be either a break higher or maybe lower if this breach higher turns out to be a false break out of this ascending triangle. Thus, a primary potential on the top side will be plus 241 ringgits from a confirmed breakout from the ascending triangle pattern, with a secondary hard to reach potential of plus 344 ringgits from a confirmed breakout of the ascending triangle pattern. Please note, even there we have the possibility of false breaks, so please pay attention to this. Thus, in case this is a false break higher, we have a primary potential on the downside of minus 151 ringgits from a confirmed breakout from the ascending triangle pattern on a downside, with a secondary hard to reach potential of minus 344 ringgits from a confirmed breakout lower from the ascending triangle pattern. Now, it is time to see where hopefully by next week if we will have targets topside or not. End of quote. Well, I'm afraid to say that with that shooting star pattern type 1 bearish, which you saw 3 weeks ago, I am now wondering, with the market seemingly stabilizing over the bright green upper bear channel, whether this might lead to possible targets for the ascending triangle pattern on the top side, and soon, but nothing is verified as yet. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.